Beef Market Update with Ann Wasco on RealAgriculture.com is brought to you by Haney Farms. It's now time for the Beef Market Update, and as always, we are joined by Ann Wasco of the Gateway Livestock Exchange. Annie, how are you doing on this fine Friday?
I am good, Sean, and you? Back from Ontario, I hear?
Yeah, back from Ontario. I was at the Canada Outdoor Farm Show all week. It was a lot of fun. It was good. Some of the same issues, variability in the crop yields and all those kinds of things. It's like everywhere you go, it's the same kind of story for a lot of people.
No, it wasn't raining now, but I see that maybe you've brought some of their prior rains back west with you, which I think many will be thankful for.
Well, it'd be much needed. Yeah, definitely especially with all the wildfires. Let's start off right there. Huge impact on a lot of ranch and pasture land with the wildfires in BC and in Montana.
BC, Montana, of course, now we're hearing talk of, or the stories that we've seen this past couple of weeks in Alberta, southern Alberta, and then, of course, this week at Suffield. So it's a significant issue. These are, grazing lands. This is often winter feed for many, and, of course, sets us up for next year. So really big impacts that I don't think we've got our full head around the overarching impacts of these fires long term.
Very sad, very dangerous, and I know I'm actually headed to Missoula tonight to go to the University of Montana football game, the Grizzlies game on Saturday, and they've had rain for 2 straight days, so that is not a bad thing.
No, good.
Yeah.
Yes, good to hear. Yes.
Okay, let's look at the markets here. Futures and cash sort of chopping sideways. Is that the best way to describe it?
I think so, Sean. We're going to get, it looks like, another week in the U.S. with their fed cattle market, in the mid 104.5, maybe 106 area. So that'll be the third week of kind of, I guess, define it as chopping sideways. And same with the futures, whether you're looking at October, December live cattle. Where we've seen the market, what I'd call consolidating. It's certainly on day-to-day basis. It still has its moves up and down, but overall, I would also call it kind of a sideways chop as well. So markets, maybe this is a sign of it looking for its fall bottom. But having said that, we certainly haven't had any kind of bounce up. Every time you feel like that happens, the next day it's down. So still kind of consolidating, chopping.
Okay, so let's look at the participants in this value chain. What from the packers' outlook, there's a lot of animals to kill?
Well, yeah, certainly south of the border in the U.S., bigger supplies. Again, we've talked about that. Packers in both countries, U.S. and Canada, continue to run some good-sized kills, as big a kills as we've seen in several years, and that's keeping the cattle moving. It also means the beef's moving, so that's the good outside part of this story. And margins, obviously good at the packer and at the retail level. Here, one of the changes, and up until now, we've talked about the good margins on the cattle feeding side as well, but that's changing as we transition into September and some of these lower prices. So cattle feeders now starting to be in the red from a margin perspective. And so what about the rest of the chain? What's going on as we look past the cattle feeder? Has he sent those signals down through the chain? Short answer, no. Today, fed cattle prices in Western Canada are about where they were a year ago. But if you take a look at feeder cattle and calves, they're still $17 to $20 a hundred higher than where they were last year at this time. So certainly we haven't seen that change to the system. And I think we talked about this 2 weeks ago. Because you've had a cattle feeder that's been profitable through 2017 up until now, I think the words you used a couple of weeks ago was still jingling the gene, right?
Yeah, we have in cattle feeding. We have anytime you got some jingle in the gene, you have it's just like there's a hole in the bottom of that pocket. The change just sort of flies out. Where'd that go? I'm looking for it. Here's a real concern. It's not just the cost of replacing those feeder, the animals in the yard and the increased price of feeder cattle. There's also major concerns on the Canadian dollar, and Scotiabank, I would say, went out on the higher end of the range on predictions of where the Canadian dollar could go. Not too long ago, we were at about 72 cents. They're saying at the end of 2018, they're predicting an 87-cent Canadian dollar. Not good for cattle feeders.
No. And so, whether, that is correct, like you say, we're sitting around 82 cents today. Even that is well up from where we were a year ago. So already, things are changing. If you're in Canada, you're well aware, and we've talked about this all year long, we've been in this strong basis environment where Canadian prices, because we're tight on supply, are trading above or higher than the normal relationship between us and the U.S. So that's already kind of, if you're marking on your checkbox list, that's a positive. Canadian dollar up until recently under 80 cents, that was a positive. That's changed. This is a significant change in the direction that usually puts, or eventually will put pressure on Canadian cattle prices. So a lot of moving things that were not, a part of the marketplace in the first half of this year are certainly coming into play here in the second half.
Real test of your commitment or your faith in where the dollar is going on hedging those Canadian dollars, because that's a big swing yet.
It is. And, for every cent move, the direct impact on fed cattle and then the relationship down to feeder cattle and calves is significant and direct. And then you've got all these other layers as well, basis and then, of course, Canadian feed costs and margin. So all of those things are going to play into this, and the Canadian dollar is making a move. Where it goes to and how you kind of line up your projections and how much you're willing to lay it on the line really is going to come into play.
Yeah, well, one story that is lining up for the cattle feeder is December corn at about $3.50 and change. So that's good, but dollar going the other way. So with this and the dollar, would you expect Canadian feeder cattle prices to start to come back towards where they were a year ago?
Well, certainly everything's going to set up that way. Seasonally, we're going to get into more supply. Even though supplies have been tighter, we're still going to get into a calf run that's going to still pressure the market. The question now is, do we have to make up for some of this ground of the Canadian dollar strengthening? Probably. When that happens, when the run comes, how much drought's going to impact that run? Is it going to come fast and furious here as we move along through this month and into the 1st of October? Or last year, of course, we saw a very extended calf run. So pressure will come as the supplies come on, and how much strength this Canadian dollar might see.
Okay, well, Annie, thanks a lot for joining us here today, and have yourself a great weekend, okay?
Okay, you have fun in Montana, Sean.
Oh, go Grizzlies.